Hey everybody. So some of the recent videos we've been talking about how important it is to have an emergency fund and to do some of that longer term financial planning, as it can provide a lot of stability and comfort as you go through different expenses and life events. And as these things are very important, I also feel that some of them can be a little bit more broad or higher level discussions. So I really wanted to bring some of that in focused into real world applications. And what I want to do now is get into some topics, going through Reddit and seeing some of the highest commented posts and how they apply to real people's lives. So we're going to get into this first one. This first one is a 30-year-old female who's in Florida. She's very anxious and nervous when it comes to her finances, and some of it is because of the situation, and some of it is just from the planning in general. So, what's her situation? Well, she currently relocated to her aunt and uncle's home. She is able to live rent-free, which is very nice as she rebuilds some of her finances. Her income is on the lower side at $17 an hour, with really only working 15 hours a week. $0 in cash savings, and a previous $1,000 emergency fund was completely depleted, which is very unfortunate. But that is also what the emergency fund is for. In terms of debt and liabilities, she's got around $600 in a new Chase credit card, $6,000 in student loans, and overall her expenses are low, which is great on her end. So just in terms of this scenario in general, one, being able to live rent-free with family is huge. That's awesome to have that opportunity. You can really save away money very quickly. Not having that large expense of, in Florida, anywhere from $1,000 to $7,000 a month, obviously for the higher end apartments. Being able to live rent-free can really get you back on the right track. We know that's not going to be a long-term solution. Obviously, you're going to want to have your own independence and your own place to live in, but temporarily it can help you out quite a bit. The one thing I would see is that working only 15 hours a week is probably going to have to get bumped up. We want to be at least full-time at 40 hours a week. Now, there may be some other limiting factors here that we're not aware of, maybe something medical or personal, but realistically, that's going to be a critical factor, is just working more hours. Long-term, yeah, we can work on the $17 an hour pay. I think there's going to be some other jobs that are available, or potentially supplementing with a second income. But just getting the hours up will double, if not 2.5 times her current take-home pay, which would be really big. The great thing is that she's already on the right track with her savings. She had an emergency fund set up before this, so she was able to utilize that and not go further into debt. And it means that you have the personality and the mindset about how important an emergency fund is, which is really fantastic. So while you're not paying rent right now, I would utilize this time to rebuild up those cash surpluses so you can, one, get your own apartment and be able to live in there. Probably some expenses come with moving as well. But then two, have that emergency fund if something actually goes wrong. Maybe a car breaks down, or when you're in the apartment, you're gonna have security deposits and things like that. So there's a couple simple solutions I think that can really get you on the right track. Unfortunately, you took a step back in your financial journey, but that's not the end of the world. That's what the emergency fund is for, so I'm glad you utilized it, and now it just takes a little bit of time to rebuild it up. Now, in terms of the second part of her question, which is looking at other types of jobs or certifications, I think at a high level, keeping your eyes open for job opportunities is great. There's always going to be companies or positions that offer broadening experiences and are willing to pay you more. The job market right now is looking for highly qualified and highly competent people. So if you're able to prove yourself and to increase your income while doing it, that's a fantastic opportunity. What I would caution in is getting certifications or additional education just for the title itself. You can run into kind of a red herring of constantly going after more and more certifications that don't actually have an application to a job function. There are a lot of companies now where if you can get through the in-person interviews and just show that you're a reliable, dependable person, they will train you for what you need to know. Now, it's not going to allow you to switch to a completely different job function that you have no background in. I couldn't be a medical doctor just because I wanted to and learn on the job. Obviously, there's going to be some things that require that pre-education, but there are a huge amount of opportunity in terms of tech and interacting with customers, especially now as AI is coming more and more prevalent, to where you can be customer focused, customer front, and help them with that. And companies are really willing to train you in their processes, and that can also be pretty incentivized as well from a salary perspective. The second topic we have here is taking a vacation. It's a 19-year-old who's currently living with their parents. They do have some assets saved, which is fantastic. $25,000 is a huge amount saved at that age, diversified across a Roth IRA, some taxable brokerages, high yield savings, and then just a standard savings account. In terms of expenses, very, very low, almost zero. And this is really fantastically set up by currently living with the parents, which is normal for about this age. There will be some more expenses coming up, so that's something to keep in mind. In terms of the financial habits, very frugal, which is how you get $25,000 saved before you're 20. And then saving almost every dollar earned, which is just hats off to this situation. You've done such a great job and stayed grounded as you've earned money very early on, and you will see that pay dividends in the future. The money that is saved now in a Roth IRA is going to grow, and you can take that out tax free. At this age, I think I've seen the multiples of 60 to 70x. What you're currently putting in now is what you could pull out in retirement at 65, 70. So if you're putting in $1 and you're getting $60 out, that is phenomenal. Now, obviously, you have the drawback of you won't see that money for at your almost 45, 46 years, but that's okay. That's what retirement is for. It's money that we can set aside and then enjoy it later. In terms of the question, can you take a trip to Japan? You absolutely have the money for it. The question is whether or not you find that as a priority. When it comes to spending your money, and especially a larger purchase like this, if it's nearly $4,000, you're going to have to make that decision as to whether or not you think you can put that money to better use now and in the next few years, or if the joy that you'll get out of that trip is going to be worth the dollar expense. I don't want people to not live their life, especially when you're young and you can travel. That's such an awesome opportunity, and I've been to Japan. Japan is an amazing place and has some of the coolest things to see. But I would caution you against taking something too much to where that money or part of the money could be used to set you up even better in the next few years. So what does that compromise actually look like? Well, the biggest cost to get in Japan, at least from the US, is going to be a large airline ticket. You can live and stay pretty frugally in pretty much anywhere you want to go, and that's going to help reduce a lot of the costs if you're willing to stay in a slightly lesser hotel or just a mediocre hotel. I wouldn't go too crazy with it. You can save quite a bit on the living and food expenses. There's plenty of street markets and things like that. The biggest one is probably going to be your airline ticket, which is going to probably be $1,500 to $2,000 at a minimum, if not slightly more. So in the terms of this scenario, I think you have done such a great job saving this amount of money at your age of 19 that enjoying it and seeing the fruit of those labors is going to be critical. You don't want to just go your whole life working to make a number higher and higher. And so this trip may be one of those things that continues to push that energy. And so this is why I want to save, this is why I want to invest, and this is what I can get out of it, these amazing life experiences. I would ask you to just be cautious about how much you're going to spend. Trips are notorious for getting larger and larger and larger, especially catching up on expenses you might not have thought of. In terms of taxis or transportation or larger food may cost more, or you may spend more on things while you're there. You may want to do some shopping and other expenses that you haven't accounted for. And quickly this $2,000 to $3,000 to $4,000 trip can double, and now you're at $8,000 and you've spent a large portion of what you've saved so far. So I would just caution on some of those ballooning expenses. And things to keep in mind, you are 19, and so there is a chance and there's a high probability that you're going to have some larger expenses here in the next few years. As you look to move out of your parents, signing for an apartment lease is going to be quite a bit different, and you're going to need some of those cash reserves to cash flow and to pay for that month-to-month expense. You're also probably looking at cars. I don't know what you currently have, but there may be an upgrade needed in the future, or a renewal. So that's another larger expense. And then of course college, if you want to keep doing anything with that, or if you're going to stay and just go right into work. Those are just a few things to keep in mind. All right, this third post is going to be on the investing trend that we've been on. What is the best site to buy stocks from? They're currently looking at a couple different brokerages, maybe split across a few, really wanting to have something seamless but also high quality, which is somewhat difficult. A lot of times in software, typically what you're looking at is a great user experience, but then maybe lesser on the actual features, or you're going to go with more of a robust feature set, and it might not be as user friendly. There are some compromises I think we can find, and more people are expecting a better experience as they're using the web platforms. So we could talk about that as well. For a primary broker, what I'd recommend here is sticking with some of the big box names. There's some very easy ones and not affiliated with any of them, so do your due diligence, look at them. But Vanguard offers great ones, Fidelity, Schwab, those are some of the big names that have been around for a really long time. Now, what I will say is these do fall probably more into the long, big name, less user-friendly experiences. Some of the user interfaces are just going to be more basic, show you the information, and that's about it. As a secondary option, I don't love this for a long-term play, but getting into investing, and if you're new to it, Robinhood does have a very nice UI. They make bank transfers from your accounts into the platform very easy. The biggest concern I have with them right now is that they are getting more into the prediction markets and the swing trading. So it's a little bit less about the long-term planning and the financial stability that investing can bring, and is more getting into the quick near-term adrenaline spike fun that I would consider more entertainment value than actually investing. So be very careful with platforms that allow you to move money, that give you access to margin, which is taking out loans to invest, and of course anything tied to prediction markets or gambling. Companies offer this because they can make a lot of money from it, not because consumers are seeing returns from it. So any type of gambling is offered because there's money to be made, not because it's in your benefit. All right, this last one is a great one, and it's about paying down a mortgage rather than saving every month. And this is, I wouldn't say a hot topic, but it's frequently debated. And I would say the difference here is talking about the emotions behind finances and the actual math behind finances. So this person, they have $17,000 in invested capital. They do have a fairly standard mortgage right now with $175,000 balance at 6.5% interest rate. The house is in a great location, and they see it as a forever home, which is fantastic. Buying a house can be an extremely emotional process and also very daunting. It's typically one of the largest expenses people will go through, and it's not very liquid. So if you end up making a bad choice or the house has issues, it can be a real money pit. Or on the flip side, like you have purchased a place in an excellent location, you can love the property and you can finally build out your lifestyle around that house. Back to the debate about paying down the mortgage or saving. You're going to have to start evaluating what brings you the most comfort around your finances. If you are a very math and stable investor and saver, which I think you are with a house and some of the savings that you have, and you can hold yourself accountable to that, there is a thought to keep the mortgage as long-term debt and to simultaneously invest and save alongside it and do both at the same time. And so what that looks like is your month-to-month mortgage charge will come through. You'll pay that, but then as you get paid bi-weekly or monthly, you'll also invest into your normal IRA accounts, whether it's a 401k or outside external account. And that way that builds and is invested and continues to grow, probably, or at least right now, at a higher rate than the mortgage interest rate is. The caution for that and the caveat is that the rates and returns are not guaranteed. So as much as it might be nice to have a 10 to 12% return, or what we've seen in the last couple of years, way higher than that, we could go through a lower returns cycle and not get anything over the next couple of years, to where you would now be paying a mortgage and also not getting a return that you were expecting. But the important part out of any retirement investing or long-term investing is that it is long-term investing. It is not meant for a 2 to 5 year swing, put some money in and then pull it right back out to spend it. These are supposed to be 20+ year terms, which can weather any storm that we've gone through so far and historically. Now, what would be the pro of paying down the mortgage? This is where I was mentioning before about the emotional side of it. Not having a mortgage payment can free up so much cash flow on a month-to-month basis, to where you no longer owe anybody anything other than the year-to-year and utility expenses. So you will continue to owe your property taxes and HOA fees and things like that, and of course the utilities to actually run the house, but you won't be slave to a lender of monthly interest and principal, which can feel amazing. The money that you make is the money that you take home when you don't have any debt, and this freedom is hard to explain, honestly. If somebody has always had a car loan or student loan debt, it seems like such a large portion of your income is taken out almost immediately and goes to somebody else. But when that money is actually coming into your accounts, it can free you up to think about what you actually want to do and how you want to enjoy your money, whether or not you want to save up for some trips that we've talked about in this video, or if you want to invest it in other accounts, if you want to donate to charity and see the joy come through other people. Those opportunities are all opened up when you have more and more cash flow, and when the money's actually coming to you and not being funneled from your paycheck to somebody else. So that would be the two thoughts that I would have, is if you want that emotional stability of having a completely clean slate and not know anybody anything, then yeah, I may add some smaller increased payments. I wouldn't go full bore and put everything into the house all at one time. But if you wanted to increase an extra couple $100 or $500 a month to start knocking it down even faster, I think that's a great opportunity to bring you that stability and clear out your debt. And on the flip side, if you are okay with just working as the loan terms comes due, you can also invest that money on the side, as you've been doing in your IRAs and your investment accounts, and you can see it grow alongside as you pay down your mortgage. So those are the two paths that I would recommend. All right, those are some of the first topics that I saw on Reddit, and I think they're great topics as people are experiencing their financial journey in their real life, and how we can apply some of these learning aspects to these real situations. If you want to simplify everything that you're doing and not have to manually guess as to what the next step is, visit SimpleFinances.co. It's a fully automatic platform where you can seamlessly load in your accounts. You can pull in your transactions, and we'll even do a full account review to tell you what the next step is and what things you should look at. In terms of these real life scenarios, this is such a great opportunity to get real feedback as to what you're doing on a day-to-day, and it lets you clear up your mind and plan for the future. So give it a check out.